Yo, guys, what is going on? I hope everybody's having a fabulous day today. Now, today I'm going to talk about a stock, a dividend stock, that I don't really see anybody talk about. I don't think I've seen any of the popular, famous YouTubers talk about it at all. And so, really quick before we get into what the stock is, what does a dividend stock need to have to be good? It needs to be all weather, meaning it's always in use. It needs to have good safety, but it also needs to be trading for a pretty good value with a solid dividend. So now, what company could that be? Could it be a beer company like Anheuser-Busch? So ladies and gents, please sit back. Relax. I hope this microphone still hears me. Relax. Drinking O'Doul's. And by the way, this is non-alcoholic, so I can make this video. By the way, that is one of my selling points on why this stock is great. So guys, no, for real though, sit back, relax. I hope you guys enjoy the content. We're going to get to some good stuff. Some stuff that I don't think anybody's talked about in terms of stocks and in terms of this company in general. So I'm really excited for this video and hope you are too. Let's get right into it. Alright guys, so Anheuser-Busch is trading for $46.85, has a 10.3 PE roughly, with an EPS of 4.53, a forward yield of 4.5%, and that's a payout of 2.1 cent a share. And guys, this company is rated undervalued by most analysts with a 29% estimated return. Their market cap is at $90 billion, and their forward P is a little bit higher than their current P because of some short-term headwinds, but in the long term, this company should be doing just fine. Now, if we look at their stock price, they started about $130 a share, ended at $46 a share at where they are now, and that's about a 64% drop in stock price. Now, the reason for this is a couple of things. One, they made an acquisition for $100 billion of the company SAB Miller, which put them in that much debt with a 4% interest on that. The second reason is because they cut their dividend. And as you guys know, dividend companies, when they cut their dividend, their stock price goes tumbling because investors usually bought the company for the purpose of dividends. But I'll explain why that's not really that big of a concern to me in a little bit. The third thing is that their biggest bread and butter companies are going to lose market share, their mainstream beer segment. We will go back to this in a second, but I just want to lay out the foundation of why the stock price is down and why I don't think that that's that big of a deal, and why I think that at this opportunity, at this price, it is really a good company to buy with long-term potential, both for capital gains and for dividends as well. Alright guys, so here on their annual report 2019, what we'll see is a couple things. One is that their beer volumes actually grew. And so this says that they're not really dying that much in the areas that matter. So aggregate, they're growing their beer volumes. They're growing their non-beer volumes, which I'll get to in a second. And the fact that they're growing, despite the fact that their main beer companies, such as Bud Light, are losing market share, that just shows that this company has resiliency, innovation, and great products, great brands. Now, here's the thing. A lot of investors will say, hey, this company is losing market share in Bud Light, as I just mentioned, but where are they losing market share to? They're losing market share to their own brands. People aren't leaving Anheuser-Busch and going to Coors. People are leaving Anheuser-Busch's mainstream segment to go to their premium segment, hence the increase in volume growth of beer. Now, the second aspect to that is that, so not only are they growing in terms of volume, which is good in general, but they're also, again, having people leave the mainstream segment to the premium segment where there is bigger margins because the alcohol costs more per bottle. And so that means they're winning on two ends, the volume end and the margins end. Now, people are caught up again on the fact that Bud Light's losing market share and their mainstream segment is losing market share. Here's the thing. They have a good portion of their business in mainstream. And the fact that they have that portion, and a strong portion at that, is because, listen, when a recession hits, when a pandemic hits, whatever it might be, people are going to be flocking back to these more affordable brands of alcohol. So yeah, they maybe should be moving away from the mainstream segment, but they should have a mainstream segment because now they're the kings in not only growing into the premium segment, but they're also the number one brand for affordability. So ladies and gentlemen, if they're the number one brand in affordability and they're the number one growing company with 9 of the 15 fastest growing brands, then that simply means this, guys. That means they're well diversified for numerous things. The growth of people's incomes and the growth of people's wealth so that they might want to actually pay up for their beer, but they're also prepared in case people revert because of a downturn in the markets, or because for some reason some people might lose their jobs. Well, they got that side of the market covered too. Now, on top of that, they also have 70% of their volume sales going to emerging markets. Now, emerging markets are important because you have two things working for you here. One, people are probably buying cheaper beer because they want to be able to afford it in these emerging markets where they might not have as much income. Now, as they get richer, you can actually see them go up to premiumization. Number two, when they go up and start to get richer, you can actually increase the prices on them as well because you're going to have more disposable income to spend. And they're going to be more willing to spend another dollar or another 50 cents or whatever it might be on a bottle of beer. So when you have that much of your volume growth, or excuse me, your volume sales coming from a country that might have less wealth than the United States, you can see a lot of growth in those areas. And that's why I don't really see the growth slowing down for this company anytime soon. The other thing that this company has going for it is the fact that they have a goal of making 20% of their volume non-alcoholic or low alcoholic by 2025. Now, this is from 7% in 2019. This is a CAGR of almost 20%, or actually a little bit above 20%. And I don't believe that it's going to stop their growth in other areas, in the alcoholic segments. Here's the reason why. I am drinking this right now shooting a YouTube video. If I wasn't drinking this, right, and this brand didn't exist, this non-alcoholic beer didn't exist, I would be drinking a water. So they're taking market share away from different kinds of drinks that are non-alcoholic in everyday scenarios, right? You can drive and drink this. You can go to a sporting event and drink this. You can play sports and drink this, if you're playing like a recreational sport. But beer, actual beer, you can drink that at parties. You can drink that at night settings. You can drink that before you go to bed. Now we're expanding with Anheuser-Busch's non-alcoholic growth. We can expand into areas of everyday life. And that's why I'm very, very, very excited for that segment of their business. Another growth vehicle that should be catching on is their e-commerce platforms. Now, they have a couple e-commerce platforms that have grown 50% year over year, mostly led by South America and Europe. Now, this is great because of a couple of things, but the main one being the fact that, guess what? E-commerce is great for this pandemic because people are going to want alcohol delivered to their house, and people aren't going to be, people aren't going to stop drinking alcohol just because they don't have money or just because there's a recession, but they're going to downgrade. And as we already explained, Anheuser-Busch is set up in the in the mainstream segment, and therefore when people downgrade, they're going to be downgrading to Anheuser-Busch. The next thing is that, okay, again, people are going to want e-commerce going to their homes, but it's also easier to just have alcohol delivered to your house maybe once or twice a week instead of having to go to a liquor store. It just makes life a lot easier. It's less of this commute, less of this process, and more like, okay, cool, I just got some beer at my door delivered. And because e-commerce is a new wave, I believe that Anheuser-Busch is going to be well positioned for this growth. Now let's talk about their innovation outside of beer. Now, if we look at their volume growth again, guys, we see a growth of about 1%. Now, their beer contributed 0.8% of that volume growth, but a much smaller portion of their business, for right now at least, is their non-beer segment. Their non-beer volume grew by over 4%. Now, this is very important because of a couple things. Now, seltzers, that's what I want to focus on. They sell wine, seltzers, and spirits in their non-beer segment. But it's very important to look at seltzers because that's a huge growing industry that I see a lot of potential. Now, the number one thing that I see potential in is their ability to take current drinkers of beer who might not like it too much and convert them to seltzer drinkers. Now, you might say, BK, this is bad because people are going to leave their own their Anheuser business of beers and then go into their seltzer business. Well, correct, but here's why I don't mind it. When people do this move, make this move, what you'll see is that seltzers are going to be less filling. And when seltzers are less filling, people are able to drink and consume more seltzers. That's number one. Number two, seltzers have a taste. So I believe that they'll demand a higher premium because guys are going to taste better and people are going to be willing to pay up. So when you get a drink that's less filling and you have to pay a premium for, Anheuser-Busch has the ability to sell more volume and more cans, generating them more revenue. Now, that's assuming the worst case scenario where literally the only reason they have a seltzer business is for their own beer drinkers to convert to seltzers. But now let's look at it from a different frame of view. Most of the people who drink beers have a certain demographic. They have a certain kind of personality, certain kind of taste bud, a certain kind of love for beer, I guess you could say. Well, when you look at the demographic for seltzers, it's a very different demographic. Now, I don't have any stats on this. I'm trying to find stats, and if I do, I'll put some up on the screen right now. But so far, I haven't found any. This is just kind of my idea, and what I've seen is that a lot more women love seltzer than men. So you're attracting a new demographic in women. Number two, men who might not like, or women who might not like beer because it's too filling or maybe doesn't taste right, they can come into seltzers. So what I think is the better possibility than people leaving their beer segment to go to their seltzer segment is that Anheuser-Busch is probably more likely going to open up their doors to new consumers. Now, when that happens, I see a lot of growth potential in this area. Now, a third thing that nobody's talking about is that spiked seltzers can actually take away market share from vodkas and hard liquor. Why? Because, well, Anheuser-Busch has the ability to very easily, and guys, when it comes to alcohol, it's very easy to adjust the amount of alcohol in a drink. It doesn't take a lot of effort. Well, Anheuser-Busch can test out changing the alcohol volume, and next thing you know, consumers are very excited about the fact that their seltzers might have a good amount of alcohol in it, but it's going to taste like a mix, right? So people buy vodka, mix it with orange juice, mix it with some juices to make it taste good. Well, now you can just buy a seltzer and it's already pre-done for you. And because it's a factory made, it's probably going to taste the same every time. Whereas when you make a mixer yourself, you never know. Sometimes you might mess it up or botch it. Guys, I really need to talk about and address the debt and the dividend of this company. Now, if you look at the dividend, the payout ratio is quite high. But when we look at the real metric that matters, free cash flow, we see that their payout is only about 63%. Now, this is very good for a beverage company and leaves a lot of room, about 37% of free cash flow to reinvest into the business, to have as cash, and to pay off debt. Now, the problem with debt is that they have about $84 billion of debt right now. That's 4 times EBITDA. Now, with an EBITDA margin that's quite high, the debt's not really that big of a deal. I think the number is a little bit more scary than it really is because their margins are the best of any business out there. Now, the debt has a 4% interest rate, and they have $17 billion in liquidity. So I don't really see an issue there. In addition to that, they're going to be selling their Australian business to a Japanese company, and that should yield a $11 billion cash influx. Now, when that happens, they're going to have even more cash in the 20 billions. And when that happens, I think that people are going to look back at it and say, well, they actually do have the cash to deal with this short term and even long term because, guys, a beer business is never going to lose revenue. It's never going to lose business. People always want their alcohol. People always want their drinks. And with all of the growth factors I've already mentioned, in addition to the fact that they're key in the mainstream affordable segment, I don't think that this is going to go away. I don't think their revenues are going to hit zero. And I think that their dividend is going to be sustainable from here out. Now, should we expect another dividend cut? Perhaps in the short term. And even if they cut it, they're paying you a starting yield of over 4%. So let's say they cut it by 75%. We're still at a high dividend yield, guys, right? We're still at a very good solid dividend yield. Even if they cut it by almost 50%, that's a 2-point-something% dividend yield. And I'm completely fine with that because I believe over the long term, not only are we going to have the dividend increase because they're going to be growing in these segments that I've already mentioned, but number two, we're going to get capital appreciations because people are going to realize they're able to pay off the debt. Their debt's going to dwindle down as they pay it off with the extra capital they've received from cutting their dividend. And once that happens, people are going to jump right back into the stock and the stock price is going to go up. Now, in terms of the dividend cut, why was the dividend cut? The dividend wasn't necessarily cut because of liquidity issues, as I've already mentioned. They have $17 billion in liquidity. The dividend was cut, according to management, because they wanted to make sure they can accelerate paying off debt. Now, this article that I'm showing up on the screen right now, this was before Corona even hit us. So this shows that the management is eager to make sure that their balance sheet is great for their shareholders. And so when they bought SAB Miller, the reason that they have all the debt on the balance sheet, yeah, like that added a lot of debt and it was kind of a hit on shareholders. But the management team knows that, and they're really looking at cutting that debt down to make sure that the shareholders are comfortable owning the stock. All right, ladies and gentlemen, that is all for today. If you enjoyed the video, please hit a thumbs up, hit the subscribe button and the notification bell. Drink some beer, drink some Anheuser-Busch, make yourself rich, buy the stock. I believe it's a great play for the long term, guys, in all seriousness. I think the dividend's going to keep growing, and I think you're going to get rich out of it. I think that you guys will be wealthy, and this is a great addition to your portfolio. Of course, diversify, and disclaimer, I am not in a professional investor, so don't just take my advice, but this has been an educational video for you guys. Hope you guys have a great day. This has been BK. Stay safe out there, and bye-bye, guys. Have a great night.